Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is June 21st, 2018, and tonight I'm going to take a look at cotton. One of many ETFs that are out there, not many, but a few, is BAL for cotton. And if we come across here, we've got a mixed bag here when it comes to the different types of trends with the movements that we've been seeing as of late. But we have a nice little technical rating, which is positive. Now, we've been short, and so certain things are starting to adjust. And we also have major support. So we'll cover all of these patterns because there's a lot actually going on with cotton. The other thing that took place today was a surge low, which is a profit-taking type indicator, and it worked well since we were able to unwind some of our positions in cotton. So here is a daily chart here for cotton. You can see the market has been moving to the downside, and with the close, the last three closes, it's basically been at this support level resistance because it's been jumping above and below. So I'm just going to call it support to the market given where it is at the exact time where we are right now. And that is at 84.77. This been the December contract. And so what we want to do is get a feel for what's taking place here, given the fact that we are at support to the market. If this should break, then the next level is going to be down through here, and it's going to coincide with the 200-day moving average. So I'll give you the number. It's at 78.45, but for those of you that don't have our signal levels, just simply look at the 200-day moving average and it'll probably be pretty similar. Now, when you look at this chart, the fact that it broke below the 50-day moving average, this yellow line, we're at support. Maybe it holds, maybe it doesn't. You have a couple of conditions here where it's telling us that it's going to actually find support, but just beware that it could actually sell off below this particular threshold. But recently we had an elastic low pivot. We also have, as I mentioned, and this is a short-term indicator, but a surge low that triggered here today. And this is a profit-taking for this sell-off. Now, I mentioned that our systems liquidated position. Where we stand right now is perfectly hedged. Got a short system that is daily, and we have one that is long on 60-minute bars. So right now it's perfect hedge, a lot of nothing going on profit-wise. But earlier today, we liquidated two short positions, a 45-minute and a 90-minute system. Those having exited, one today, one yesterday, and been able to take advantage of this sell-off. So this Rigel 45 system, 45-minute bar system, I just want to show this to you just so you can see what took place, because it was actually a really good trade. Here's the system having gone short the market and held that position all the way to today. Now, a little bit of a bounce here caused us to exit our short position. We're not catching the exact bottom. Maybe the market breaks this support level at 45 minutes. Who knows? All I know is that the system found that it wanted to liquidate itself. It did so, and it happened to coincide with that level that I was talking about before, that indicator, that pro alert that I was talking about, that surge low was giving us an indication. Now, as I mentioned, with that support and resistance level that we're actually teetering on right now, it's kind of interesting that our systems are hedged, one short, one long. The daily system is still short, so that's a longer term, but as a form of a mechanism to hedge it, that's where that long system came into play, and it's been able to basically tell us that something's happened at that support level. The fact that we're hedged and having unwound some of our positions, and the only thing that remains are the two systems, one long short, that we're looking at a little indecision as to where the market theoretically could be heading. If we pull up a seasonal chart, This is a couple of days old with this little triangle, so we're in this little consolidation phase on the 5-year chart. So I'm just simply showing this, that the market did in fact sell off following its seasonal process, but for the remainder of the summer, it's really just going to be kind of choppy, trady type deal until we get into September, where there's going to be another, at least according to the 5-year seasonal charts, another little bit of a trend and some good volatility to be able to trade from that side. So I don't really have high expectations for cotton in the coming months or so, just simply based upon the seasonal charts. But the systems, as always, will always be watching the markets and always looking for opportunities. But I think for the most part, having taken off a little bit of profit with that one particular trade, and I think it was like around $4,700 or so, thereabouts. That's what that one trade on that 45-minute bar chart was able to capture. So when you get these sell-offs, and you can see that this got in here on the 11th, and obviously liquidated tail end of today, that there's really good opportunity to be had in cotton. But I will say that cotton is a fickle market. I say this a lot every time I talk about cotton. Cotton is just simply not the easiest market to trade, from the perspective that when it's good, and you make good money, but then there are periods where it just simply chops you up, and you have to be extraordinarily patient with this particular market, that you can have loss after loss after loss after loss, hopefully relatively small losses, and then you get these big moves. So you take the money while you're able, but this is helping to pay and offset for a lot of small losses along the way as well. So again, if we take a look at the seasonal chart here, this consolidation, you're going to have to be very, very quick to be able to get in, get out, and really make money in this type of environment. With cotton, yeah, for the most part, I'll just simply say it this way: you want to be selective when you trade it, and when you get this type of a pop to the downside that we had through here, this is a really good time from year in to year out, in mid-June or so, to be looking at short opportunities. And then sometimes you just want to go idle and just simply wait for other periods of time, maybe in September, when there's bounces to the market and something that can offer up some really good profit potential. But expect more chop here in this particular market, and you definitely want to be looking at this support level that I was mentioning, this level right through here, the 84.77 level. Watch this because that's going to dictate, at least from our perspective, do we hold on to the long side of our systems, or do we bail on those and then look to add more to our short side? So watch the market. We're taking some of our profits, taking relatively good easy money from that side, and we will live to trade another day. Expect some more chop, and hopefully we'll look at this market again in September. So thanks for watching, and we will take a look at some more markets in the coming days.